clear. Apollo Hospital's third quarter earnings came in line with what the market was expecting. Margins are stable, hospital revenues have surged, while EBIT losses have narrowed for Apollo Health Co. Suneeta Reddy is Managing Director at the company. She's joining us right now to take some questions. Ma'am, great to have you with us here on CNBC-TV18. Good morning, Prashant this side.
Good morning. Nice to be here.
I want to start good to have you, ma'am. Just a first question on Apollo Health Co. Could you give us the numbers for this quarter? And Apollo 24/7 as well. What was the performance on the operating side?
So Apollo Health Co did really well. We had a revenue of 2,087 crores, a growth of 17%. The vertical, which is the back-end pharmacy, did really well with 1,824 crores of revenue and a growth of 17%. Apollo Online did a revenue of 225 crores and again a growth of 27%. So there was strong online growth. We had 48,000 transactions per day happening and 2 million new users, taking the user base to 31 million. And in terms of EBITDA margin, offline had an EBITDA margin of 135 crores and online a loss of 132, but actually an EBITDA of 16 crores minus the ESOP charges, of which we took away 14 crores of ESOP charges, so net 2 crores of EBITDA.
All right. Hi, good morning, Ms. Reddy, and good to see you in. Nigel on this side. Couple of questions on Apollo Health Co itself. The GMV that you were guiding for earlier was around 2,800, 2,900 crores. Is that on track? And also on Apollo 24/7. For the last 18 months or so, we have been quizzing you. Is that fundraise, on the cards? You have a timeline out there?
We have, let me say there's no pressure. GMV came in at 658 crores. So we are actually ahead of guidance. And the fact that we broke even a quarter ahead of guidance, there is no pressure on cash flows. But we do have, like I said earlier, we have people interested in investing in Apollo Health Co. And at the appropriate time, of course, we'll come to the board and to our investors with the complete plan.
So anything in this calendar year that you're looking at?
This calendar year, well, there's a possibility, but like I said, at the appropriate time. But the most important thing to remember is that we're ahead of guidance and there's no pressure on cash flows, especially because we are now EBITDA neutral.
I think the reason my colleague was asking you about the margins is because if you track your overall margin picture, right, there is some amount of pressure that you're facing at about 12.9%. You used to enjoy 16, 17% margins as well. This could possibly be because of the cost pressures that you're seeing from Apollo 24/7. Do you get a sense that there could be some pressure on margins because of that in the coming quarters? And if yes, what is the band that you're looking at?
No, so there will not be any cost pressure on the margins because as you've seen from the performance, we've actually rationalized costs to a huge extent. We've reduced discount, rationalized marketing cost and HR cost. So I think they have reached a very solid, they have reached steady state in terms of cost. There was a margin pressure on the hospital healthcare services this quarter, 94 basis points difference. And this is because, we've actually hired we've taken on doctors at guarantee money, which is a cost of 100 crores.
Okay. Ma'am, just sorry, one last question on the Apollo 24/7, the digital platform. So you've been investing heavily, right, in the business over the last many years. If you could just guide us to when is the final break-even? I mean, for example, last year, the FY23, the annual, there was a loss of about 650 crores. By when will we see a break-even for this business, ma'am?
And in 6 quarters, you'll see a complete break-even. You'll see profits.
6
and we're
quarters.
On track to deliver. Yes.
That'll be Q1 of.
Q1 of
Q1 of FY26.
Yes.
Or Q2. Okay, the first half of FY26, basically.
Yes. The first quarter of FY26. First half of FY26.
Got that.
All right, Ms. Reddy, you also had done some acquisitions, 250-bed hospital, I think, in Pune, and a couple of others. How are they ramping up?
They are ramping up, so we're ready to open in FY25 220 beds in Pune, 220 beds in Kolkata, and these will be ready. In addition to that, we're also looking at, we're looking at Gachibowli. So in FY25, we will open about 500 beds.
Oh, okay, got it. Also, I want to understand for the diagnostic business, right? What is the expectation as we move along? I mean, that business has been in an industry which has been seeing so much competition. Just trying to understand, is the worst over in terms of pricing pressure there, and what is the expectation over the next couple of quarters?
So the diagnostic business grew by 19%. Total revenue there of 111 crores, with AHLL revenues at 333 crores. And margins improved 10% in net margin for the diagnostic business. I think this has huge potential. And as Apollo is growing, as the network is growing larger, I think, there is the ability to become maybe the number 3 player in the diagnostic space. Margins will improve, especially because we're doing, we have invested into specialty diagnostics. So with this, we should get far better margins in the next year.
Okay. So can you tell me, in this quarter, in Q3, was it EBITDA positive? You said margins have improved, but I think last quarter EBITDA was about 32 crores. What has it been in this quarter?
So for the diagnostic business,
Yes.
we had 10% EBITDA margin.
Okay. And when do you plan to hit the top line of 500 crore revenue for this business?
We closed this quarter at 111, so close to, I think next quarter we should be close to 500 crores.
Next quarter, you'll be at 500 crores, you said?
Yeah, for the total year.
For FY24?
Yeah.
Okay. All right, Ms. Reddy, we'll leave it at that. Thanks a lot for joining in and giving us your thoughts on the business as well as the way forward for the company.